Ladies and gentlemen, good day and welcome to the Eldeco Housing and Industries Limited Q2 and H1 FY24 earnings conference call. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Abhishek Bhatt from EY Investor Relations. Thank you, and over to you, sir.
Thank you. Thank you, and good afternoon, everyone, to joining us on the call. Before we proceed to the call, let me remind you that today's discussion may contain forward-looking statements that may involve known and unknown risks, uncertainties, and other factors. It must be viewed in conjunction with the business risks that could cause future results, performance, or achievement to differ significantly from what is expressed and implied by such forward-looking statements. Please note, the results and presentation are available on the exchanges and on our company's website. Should you need any assistance to receive them, you can write to us and we'll be happy to send them over. Today, we have on the call Senior Management of Eldeco Housing and Industries Limited, which is represented by Mr. Pankaj Bajaj, Chairman and Managing Director, Mr. Manish Jaiswal, Group CEO, Mr. Sanjay Agarwal, Group President, Accounts and Taxation. We will begin with the highlights for the quarter, followed by Q&A. And now I would like to hand over the call to Mr. Manish Jaiswal for his opening remarks. Over to you, sir.
Thank you, Abhishek. Good afternoon, everyone. I am Manish Jaiswal. Thank you for joining us today on the earnings call to discuss our company's performance during the second quarter and half year of fiscal year 2024. I am pleased to report that our company has continued to maintain a steady performance during this period. There have been several key factors contributing to this success. Let me begin with few comments on real estate market, after which I will discuss operational and financial results for the second quarter ended September 2023. The real estate market in Lucknow is on an upward trajectory, witnessing a consistent rise in demand for both residential and commercial properties. This growth is largely attributed to the city's ongoing infrastructure enhancements and improved connectivity. And at Eldeco, we remain aligned with this trend by strategically increasing our supply in this market to continuously meet the rising demand. Moving on to operational highlights of the company. It was a relatively quiet quarter for us, speaking based on the account reporting, as no new projects were introduced. However, the sales bookings of Latitude 7, which was introduced in late Q1 FY24, gained significant momentum during Q2 FY24. Based on the allotments done, we achieved a modest year-on-year growth of 6.5% in bookings, reaching the sales booking value of 24.7 crores. The total collections in Q2 FY24 amounted to rupees 28.6 crores. During the same period, we successfully delivered around 38,000 square feet worth of area, that is around 30 homes, to our delighted customers by giving registries to them. Turning our attention to our new launches, in Latitude 27, which is our most recent launch, we have already allotted 41 units till September 2020. And based on the pre-commitments we have already received on the sales side, the project is expected to boost both the sales booking numbers and collection numbers significantly in Q2 of FY24. Furthermore, as part of our efforts to strengthen our supply, we are now gearing up for the highly anticipated launch of Interior Phase 2, for which the layout was approved in September 2023, and RERA is expected to be received within next couple of weeks. This is going to be our most significant launch this year, with the sale area of approximately 6.3 lakh square feet spread across 28 acres. Additionally, we are in the process of seeking RERA registration for our luxury high-rise project Eldeco Trinity on Shaheed, for which the layout was also approved in September 2023. We are in the process of applying for RERA for the same. Both projects are set to augment our portfolio by approximately 11 lakh square feet worth of saleable area within this financial. In parallel, our commitment to expanding our land holdings has yielded results. With successful acquisition of 18.1 acres of fuel that we have acquired between July 2023 and September 2023. This achievement is part of our ongoing land aggregation strategy. We have plans to continue expanding our land portfolio in the coming months as well. In the Q2 FY24, we secured substantial funding of around 160 crores from two separate lenders, Piramal and ICICI Bank, out of which around 80 crores has already been allocated and effectively deployed to support our expansion and development initiatives in the company. We are confident that our combination of existing inventory and substantial number of upcoming launches that we have in pipeline would be instrumental in achieving our supply building objectives. While H1 FY24 may have been subdued, we anticipate a more promising outlook for the company in H2 of current financial year. As we near the festive season, we want to assure you that we are fully prepared to meet the increased market demand thanks to the success of our recent launch of Latitude 27 and pipeline of new projects in the name of Imperial Phase 2 and Eldeco Trinity. The demand for high quality real estate continues to be strong in Lucknow, and we are strategically positioned to continuously seize this promising opportunity. Moving on to our Q2 and H1 FY24 financial performance. The consolidated revenue from operations was 17.1 crore in Q2 FY24 compared to 32.9 crores in Q2 FY23. During H1 FY24, the revenues stood at around 41.9 crores compared to 60.5 crores in H1 FY23. The consolidated EBITDA was at 7.4 crores in Q2 FY24 compared to 9.6 crores in Q2 FY23. EBITDA margin remained high at 43.6% in Q2 FY24 compared to 29.1% in Q2 FY23. The H1 FY24 EBITDA was at 15.2 crores compared to 20.9 crores in H1 FY23. The EBITDA margins for H1 FY24 stood at 36.4% compared to 34.5% in H1 FY23. The company's consolidated profit after tax stood at rupees 6.4 crores in Q2 FY24 as compared to rupees 8.9 crores in Q2 FY23. During H1 FY24, the PAT was at 14 crores versus 19 crores in H1 FY23. With this, I would like to open the floor for questions. Thank you.
Thank you so much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets for asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Mr. Kunal Tokas from Fair Value Capital. Please go ahead.
Hello, sir. Am I audible?
Yes, Kunal. Please go ahead.
Okay. Thank you for the opportunity. And my first question was about the number of subsidiaries that we have. So we had, according to the FY23 annual report, we had 40 subsidiaries and we had incorporated 6 more in FY23. So I wanted to know what the reason for having so many subsidiaries was and why we cannot have a more linear, more simpler structure. That was my first question.
Any other question or should I answer this?
I have more questions. You want me to?
Yeah, please. It would be great if you can complete the questions.
All right. My second question was related. So in FY23 also, we had given a loan of we had outstanding loan of around 41 crore to Eldeco Infra and Properties, and we had given a further loan of 5.5 crore. I wanted to understand the nature of the outstanding and by when can we expect the recovery of the loan. And we also had total advances to subsidiaries to the tune of around 98.6 crore. So I wanted to understand the reason for that. My third question was that we have acquired land parcels in cities like Gurugram, Sonipat, Ludhiana, Greater Noida. So can you help me understand what the approximate land area that we have now, and when can we expect to start commissioning the projects on these land parcels? And also, like, what your vision is for the next 3 to 5 years? Like, what kind of revenues are you expecting from your new projects like Trinity, Latitude 27, Imperia, and how much can they contribute to our total revenues in the next 3 to 5 years? Those are my questions.
All right. So I'll start from the first question, which is basically on the number of subsidiaries that we have in our organization. So there are, a couple of reasons why we need to have multiple subsidiaries while operating in our business. When we do land acquisition, there's and aggregation, there's a Land Ceiling Act which we have to respect, based on which there's a limit to a certain acreage of land that we can acquire in one subsidiary. And when we are doing a big township acquisition, it is very regular for any developer or any land aggregator to basically acquire the bigger land parcel in multiple subsidiaries or SPVs, so that they do not circumvent the law. And second point related to the same question is, it is also prudent practice to basically have new projects in new subsidiaries. This practice has lately evolved after a lot of new compliance requirements that came into the industry, like RERA compliance, etc. So that allows one project to relatively freely operate in a one subsidiary or one SPV or a separate SPV in which no other project is there, by effectively avoiding the cross liabilities that can come up due to customer issues or due to approval issues that may impact one specific project in the overall company.
Okay.
Does that answer your first question?
Yes, sir, that does.
The second question is regarding the loan that has been given to EIPL. Well, that loan has actually been given under a commercial understanding. It's a very protected commercial understanding, and we have already shared the details of that with the analysts, with the investors in these calls that we've been having previously, and also in the presentation that we submit in the stock exchange. So this basically is a investment that allows EHIL to basically explore a market other than Lucknow in a protected manner, in which the minimum guaranteed return to EHIL is protected, while figuring out if this experiment of going out of Lucknow will be successful or not. This has done very well. This investment has performed fairly well for the organization, based on which we are also now evaluating if this experiment which was done in a protected environment can be replicated in other markets as well. So that money is basically, I would say it's there's a assured guaranteed return or the beneficial 50% beneficial interest in the Bareilly project. Whatever is higher is the return that gets paid back to EHIL in this. I believe that Bareilly project next year should be the time when we should be in a position to apply for OC in the Bareilly project, post which the distribution would happen in this particular project, and this investment would be repaid back accordingly.
This was in regard to the... Yeah. Sorry, sir. This was in regard to the 41 crore loan outstanding to Eldeco Infra, right?
Right.
Okay.
Third question is related to the advances to the subsidiary. So when, typically the fundraising that has recently been done, it has happened in EHIL, and when the recent acquisitions were done, in last quarter we did 18 acres worth of acquisition. We spent around 85 crore in land acquisition in the last quarter. So typically when this acquisition is done, the acquisition is done in the subsidiary, but the funding is raised typically in the holding company EHIL, which is why these advances are shown to various subsidiaries, and most of this money is basically utilized for land acquisition in these subsidiaries.
I see.
Fourth question is related to the projects that the group has recently acquired in various markets like Gurgaon, Sonipat, Ludhiana, other than Lucknow. As you would be aware that EHIL is a listed entity which is focused on the Lucknow market, and the group has another entity which is unlisted, which is operating in all other markets other than Lucknow. So these projects have been acquired in the unlisted entity. Fifth question related to the guidance for next 3 to 5 years. So typically as a policy, we do not provide future guidance, but based on the information that we have already disclosed today. So we are, this year we are hoping to more than double our sales booking that we did last year. I think last year it was around 100 crore, and a year before that it was around 250 crores or so. This year we are hoping that the number should be double of last year, maybe more than that. The inventory that will be releasing, other than what we have already leased, is basically these two projects, Imperial Phase 2 and Eldeco Trinity. Between the two, we have 11 lakh square feet of inventory that is getting released. While I would not like to disclose the actual pricing at this point at which we will be releasing this inventory in the market, but even if you do a quick calculation based on average realization that we have achieved in last quarter, which is 4,600 or so, and multiply that by 11 lakh square feet, I think the number would be somewhere around 500 crore in that range or so.
Okay, sir.
So
I understand.
That inventory plus whatever we have sold already up till now in this year, including in the recent launch of Latitude 27, all of these projects should get delivered in next 3 to 4 years, and their revenue should get recognized in the books accordingly post delivery. I think next year we would also be in a position where Twin Tower and Imperial Phase 1 would be delivered, their completion would be received, and those projects should also be in a position to get recognized in the books of accounts.
Okay, sir, I understand. Thank you for answering my question.
Thank you. The next question is from the line of Ms. Monica Arora. Please go ahead.
Thank you for the opportunity and congratulations on robust margin numbers. My first question is, what is the average realization of the new project, like Imperial 2 and Trinity? My second question would be any guidance on what would be the incremental collections in the next 2 years, and also if you could just give me the numbers. Have been a little bit muted into this quarter. So how do you look forward towards FY25? Those are a few questions.
Thanks for these questions, Monica. So I'll start from the last question. As far as the financial numbers during this quarter, these numbers reflect the period performance of the projects which were launched 3-4 years back, which got delivered within, say, last H1, and on which the units are getting registered in favor of customers now. So the accounting performance is basically the reflection of the actual registries that we do in favor of customers, and the real indicator of our current latest performance or current period performance would be, the land that we have acquired in last quarter, or the new approvals that we have received in the last quarter, the project launches that have been lined up for the project launches that have been lined up that will come up in coming months, the new fundraise that we have done, and also the performance that we have achieved on the sales bookings of recent launch Latitude 27. So on those parameters, I think numbers are extremely robust. But as far as the financial accounting numbers are concerned, the revenue that is recognized, as I said, it's how the revenue is recognized. The policy of revenue recognition is there in the real estate, and based on which those numbers reflect the period performance of the organization, operating performance of the organization 3-4 years back. Does that answer your last question?
Thank you so much, sir. And this was really detailed. Thanks.
So other two questions are basically kind of related to the future guidance, which I just answered to Kunal also. So we typically, as I said, we typically do not give future guidance, but based on what we have already disclosed in the market, 11 lakh square feet is getting released between Eldeco Trinity and Imperia 2. Imperia, the last sales that has been done in that project was at about 4,000, I think 4,200 rupees per square feet. They yet to come out with the pricing for Imperia Phase 2, 6.3 lakh square feet. But I would assume that it would be in the similar range of 4,000 to 4,500. As far as Trinity is concerned, it's a luxury project, high rise. It's located at Shahid Path, which is one of the most prominent luxury locations right now in Lucknow, and it has got phenomenal views of the river and the greens in front of it. So we believe that the pricing of that could be anywhere between 6,500 to 7,500 very easily, if not more. But I think the actual pricing would only come out when we are closer to launch and when we release the inventory in the market.
Sure. That's it from my side.
Great.
Thank you so much. A reminder to all participants, if you wish to join the question queue, please press star and 1. The next question is from the line of Nitin Deveria from Prithvi Finmart. Please go ahead.
Hello. Thank you for the opportunity, sir. So we're relatively new to the company. So just on a macro point, I want to understand this. Since we are focused on Lucknow market and we see there's a development going on there. So from a sales perspective, I just wanted to understand what is the purchase pattern over there? The housing demand that we are seeing, is it coming from the locals moving into apartments, or can we see it as a migration demand that Lucknow is facing? Since we are concentrated on one city, just wanted to get an understanding on that.
So Lucknow, as a city, it has very interesting dynamics. It's a capital city. It's a seat of government for UP government. It is where the headquarters of all UP government organizations are located. Any private organization, if it has to open up, let's say, a headquarter for UP, which is the biggest state by population in the country, they open up that headquarter in Lucknow. Within UP also, there is a lot of migration that keeps on happening. Sometimes it is transient migration, sometimes it is permanent migration from various cities of UP to Lucknow, because Lucknow has great social infrastructure. It has got great schools, very well-known schools. It has got Medanta, which is a very well-known hospital. It has got multiple big malls. The infrastructure is, the road infrastructure, etc., is very good. The facilities are immense. So a lot of people within UP also sometimes, they shift, they either shift or they plan that post-retirement they may consider to shift to Lucknow. So a lot of those buyers are also there who keep buying from outside. But as I said, because Lucknow is a seat of government, it's the capital city, it's where the headquarters of all private companies come to UP. Those are also there. There is a phenomenal demand within Lucknow also from these buyers. As far as the preference to asset class is concerned, I would say we have seen equally good demand coming both from apartments as well as from independent housing units. Lately, in the city-centric locations like Gomti Nagar, Shahid Path, it's next to impossible to basically come out with new township land. And most of the projects which are getting launched over there because of paucity of land are group housing projects. So in those locations, whatever new absorption that happens, it typically happens in group housing projects only. But in outskirts of the Lucknow city, it is still relatively easy to acquire large land parcels and do township projects, which allows an opportunity for a lot of buyers to purchase the villas or plots, etc. also.
Understood, sir. That was really detailed. So I just wanted to understand one more thing. Are we looking at other markets other than Lucknow in the vicinity, or for the next 3 years, maybe we just focus on Lucknow as a market?
The primary focus still remains Lucknow. But as I said, we tried our hand by evaluating this opportunity in Bareilly. And that experiment turned out decently well. And with that, emboldened by that success, we are kind of open to look at some more opportunities also, which are in cities closer to Lucknow and which can easily be managed by our team, which is stationed in Lucknow only.
Understood. So my second question is, it was just more on a clarification side. So you mentioned that there is one, the unlisted entity of Eldeco is the one acquiring land parcels in other than Lucknow market. So is there a sort of understanding between the two, like you are only focused on Lucknow and residential would not be taken up in Lucknow won't be taken up by the other unlisted entity? Like how does it go? Do we have sort of understanding?
Yeah, so because of legacy reasons, that's how the structure is. That this kind of exclusivity that the listed entity enjoys by operating in the Lucknow market, in which unlisted entity doesn't enter. And unlisted entity has been operating in these multiple markets other than Lucknow for quite some time.
Okay, got it. Sir, one last question, if I may.
Yeah, please go ahead.
So in this H1, we purchased approximately 20.6 acre land, as we have mentioned in the presentation. Sir, what is the idea behind it? Like, what projects are we planning, and when do we plan that?
So, see, out of this 20 acres, I think 3.2, 3.5 acres is the land on which we are launching Eldeco Trinity on Shahid Path. It's around 5 lakh square feet luxury group housing. Other than that, rest of the land is basically still in aggregation mode. We are still acquiring more land parcels in these locations in which this 18-acre, balance 17, 18-acre land was acquired. To ensure that the aggregation process does not get disturbed, we typically do not disclose the location of the aggregation projects till they are fully acquired and applied for approval.
Okay, understood, sir. Okay, that's all from my side. Thank you, sir.
Thank you so much. A reminder to all the participants, if you wish to join the question queue, please press star and 1. The next question is from the line of Rishikesh from Robo Capital. Please go ahead.
Yeah, hi. Thank you for the opportunity. So firstly, if you could touch upon the deliveries, how much deliveries are we looking to do in H2 and going ahead in FY25?
So as far as deliveries is concerned, I think we are very close to, we are working towards delivering Imperia Phase 2 and Twin Tower. We are hoping to apply for their completion certificate within either in Q4 or in early next financial year. And other than that, recently we have got completion for Regalia Arcade, we have got completion for Uday Joy, and East End, like those projects. Does that answer your question?
So basically, just wanted to get a sense on the reported revenues. On the reported revenues basis, we have done maybe around 17 crores this quarter, and we have been in this range of 30 crores, 40 crores kind of range. So what exactly can we do on the reporting basis for, if you could guide on that for this H2 and for next FY25?
So reporting revenue is basically based on, as I said, the registries that we have done in the last quarter for the projects on which we have already received the completion certificate. But these projects were launched 3-4 years back, and they took 3 to 4 years for development, post which the completion was received, post which the registry happened. So it's indicative of a period performance, the operating performance that happened 3-4 years back. But I think as we move forward, the projects that we launched in FY22, FY23, those projects now would be getting delivered next year and a year after that, and the projects that we launched this year would hopefully get delivered in 3 to 4 years' time. So those projects would actually would come into the recognized revenue category as they get delivered, and we do registries on those projects in favor of customers. So, like as I just said, last quarter of this year or maybe early next year, we should be in a position where Twin Tower and Imperia Phase 1 should be getting completed. Imperia 2 and let's say Latitude, which we recently launched, it should be getting completed in next 4 years time frame from now. Imperia 2 should be getting delivered hopefully in next 3 years time frame from now. It is because it is a horizontal development project. It's not a high rise. Trinity again should take 4 to 5 years to deliver because it is a high rise. So as these projects get delivered, and the top line number for these projects are relatively larger as compared to the projects that we have done historically. So they should reflect in the recognized revenue numbers.
Okay, got it. And also the 2 projects that we are launching, Trinity and Phase 2, by when are we looking to launch? Which quarter?
I think Imperia 2, we applied for, we got layout sanction in September. We applied for RERA immediately, and we should be RERA within this month itself for Imperia Phase 2, post which we should be in a position to launch. So either this quarter, as in the ongoing quarter, or next quarter, which is Q4, is when Imperia 2 has a good visibility. And as far as Trinity is concerned, although we got the approval layout sanction in September, there were certain more formalities that were needed to be done before applying for RERA. So we should be able to apply for RERA within next week, 10 days, and hopefully get RERA by December end or January. So that should also be hopefully launched within Q4.
Okay, got it. Thank you.
Thank you. The next question is from the line of Samyak Sapre from Wealth3 Capital. Please go ahead.
Sir, good afternoon, and thanks for the opportunity. I have a couple of questions. So this is, do we plan any strategic tie-up with any partner for accelerating our growth in Lucknow market? That is my first one.
So to answer this, basically, we, as part of our land acquisition and BD strategy, we always remain open to not just the outright acquisition, but also joint development partnership deals. So if we get any such good opportunity, yes, we are open to tie up with the existing land partner as long as the numbers make sense. We do not foresee much partnership risk, and we can move on that front as well. I think the recent fundraise that we have done is also reflective of the funding partnership that we did with both ICICI Bank and Piramal, in which we basically borrowed the money from them to help us acquire more land parcels in order to fund our expansion projects.
Okay. So any visibility of land parcels that we plan to acquire in coming H2?
Yeah, the land acquisition process that we have is ongoing, and we are hoping to acquire some more land in H2 as well.
Okay. And just a continuation of the previous question, how do we plan to utilize the funds, precisely 160 crores, and would there be a need of any fresh debt as we see a good opportunity in Lucknow and other cities?
So thankfully, we have a good headroom in our balance sheet, and if need be, we can acquire more. We can take more debt to acquire more land parcels. As of now, the acquisition that is happening for that, the funding is available thanks to our recent fundraise. But if there is any other good opportunity that comes up, and BD and land acquisition sometimes is also very opportunistic. While we keep looking for land as a funnel, and we keep evaluating various opportunities, and whenever we find the good opportunity which is kind of complying with all the criteria, positive criteria that we have on counterparty risk, on location, on IRR, on returns, approval risk, aggregation risk, etc., we take a plunge on that particular opportunity. So that process of search for the right opportunity, that keeps on going on, and typically in BD, the funding process essentially means that we look at 50 deals before zeroing on one or two deals in that pipeline or funnel of 50, which are making sense on all fronts. So if we get such opportunity, yes, we are open to take more debt. But as of now, whatever acquisition is going on, whatever acquisition is currently planned for H2, for that we have enough dry powder in our bank account, so we don't need to.
Okay. Thanks for the detailed answer, and I wish you all the best.
Thank you.
Thank you so much. The next question is from the line of Guneet Singh from CCIPL. Please go ahead.
Hi, sir. Thank you for this opportunity. So, the pipeline for a future project, say 3 years or 4 years down the line, quite healthy for the future. But in terms of reporting revenues, this was one of our weakest quarters, say, in the last 3-4 years. So, I mean, for the coming, for FY24 or FY25 or even till FY26, I mean, should we, before the 3 years after which our new projects would probably be delivered, before that, I mean, should we expect revenues to be muted and in line with what we saw this quarter?
Well, as I've explained that, the reported numbers, specifically on the revenue side, are basically reflective of the performance that was operating performance of 3-4 years back. The projects that are getting registered this quarter is reflective of those numbers, those projects which were launched 3-4 years back. So, for on that front, it would be not prudent to make any comment because it's how the projects are getting delivered and the registries are happening in favor of customers. But as far as operating performance is concerned, as you rightly mentioned, and we have already discussed also, there are fairly strong reporting numbers both on new acquisition, fundraising, new project pipeline, etc.
Got your point. I mean, but for the coming year, FY25, FY26, I mean, in terms of past performance of the company as well, I mean, should we expect the numbers to be muted like the quarter that we saw? Or, I mean, like you mentioned earlier that Twin Tower and Imperial Phase 1 should start getting delivered in FY25. So, I mean, directionally, do we expect the numbers to be muted for FY25, FY26 reported numbers? Or, I mean, do we expect some growth over, say, FY23 numbers? I mean, directionally, I want to understand. Because I understood the point that, say, FY27 onwards, we have healthy deliveries. But looking at the reported numbers as well, in terms of, I mean, being a part of the investor community, I would like to understand, I mean, how the reported numbers might shape directionally for FY25, FY26 as well. I mean, should we expect them at least to maintain at FY23 levels? Or, I mean, how should we look at it?
Well, we do not have a policy of making future guidance in these calls. But between Twin Tower and Imperial Phase 1, I think there's enough top line numbers, the booking numbers, which have already been achieved, which can give which can allow us to basically show more strength on the reported revenue numbers than what you have seen in this quarter.
All right, so got it. So both of these would be delivered in FY, right?
So both of these or one of these, it has to be either Q4 or Q4 of this financial year or Q1 of FY25.
All right, sir, got it. And apart from these two, do we have any other major projects which would be delivered, say, in FY25 or FY26?
In FY25. So FY26. Kapil, Kapil, are you there? Hello?
Hello?
Yeah, I think not able to reach Kapil, but see, Regalia, Arcade, Uday Joy, East End, Shaurya Arcade. There's some more inventory in Regalia and City, Saubhagyam, which should also get reflected in the in FY25. FY24, sorry.
All right, sir. Got it. That's all from my side. Thank you.
Thank you so much. A reminder to all participants who wish to ask questions may please press star and 1 at this time. The next participant question is from the line of Karan Premchand Gupta from Cavi Capital. Please go ahead.
Yeah, thank you for the opportunity and season greetings. I wanted to get your, just some commentary on what your expectations were for the Eldeco Latitude bookings for this quarter. I understand that this project was launched in July, so you had practically the entire quarter for bookings, and whether it was up to expectations, and how things are going in the current quarter with the festive season and obviously a high sales season for you.
So we have already allotted around 50% of sales that has already been done in Latitude, which is around 41 units or so. And based on the pre-commitments which are yet to be allotted, I would say that the project has performed fairly well, and it should contribute more significantly to the booking numbers and the collection also in S2, which is when a lot of the pre-commitments that we have received that we have not allotted till H1, those should get allotted and should be reflected in the booking numbers.
Okay. So currently, out of the total saleable area of about 5 lakh square foot, how much is available for sale?
Well, we have opened, so there are 5 towers. So broadly speaking, a lakh square feet each. We opened 2 towers to start with, which is 2 lakh square feet. And recently, we are working towards opening the 3rd tower this festive season for the sales.
So out of the area that was allotted to the partner, about 45,000 square feet, so that is out of the 2 towers that were already opened, or is that across the entire project?
So can you please repeat it?
Right. So in your presentation for Latitude 27, there is a line item that says area allotted to partner, which is about 44,200 square feet.
Oh, that is part of the towers which are already open for sales.
Okay. Okay. So, and these 2 towers that were opened, how many units are there in total?
Well, I don't have exact numbers, but I would think, broadly speaking, 2 lakh square feet, and in terms of numbers, say average would be 1,700, 1,800 square feet. So around 120 or so, 125, something like that.
Okay. And then earlier, even during the last call, Mr. Bajaj had given a guidance, and you also spoke about basically doubling your booking this year compared to last year, so roughly around 200 to 220 crores. Out of that, how much have you earmarked for Imperial Phase 2 and Trinity?
Well, I would think between Imperial Phase 2 and Trinity, around 50%, 60% of that number would be there.
Okay. And just one last question. So, based on current construction costs and your realizations, what kind of EBITDA margin should one expect, the next 2-3 years once these projects actually get on your books?
So, I think the question is whether the kind of EBITDA margins that we have been achieving up till now, is that sustainable or not? I think the EBITDA margins that we are achieving up till now, to answer this, are kind of very high. Probably they are the highest in the industry. Typically in real estate sector, these high EBITDA margins are not there. And the primary reason for that is that, a lot of these projects which are getting recognized in the revenue line item these days they were launched on land which was historically acquired, and the land cost at that time was relatively, it was minuscule as compared to the land cost now.
So now the new project that we are launching, I don't think we would have 35-40% kind of EBITDA margins, which we have seen historically. Those would be relatively lower, or more likely in the range of 25 to 30%. The plotted development or the horizontal development township project would have a relatively higher margin number as compared to a group housing number.
Okay. All right. I appreciate it. That's all I have. Thank you.
Thank you so much. As there are no further questions, I would now like to hand the conference over to the management for closing comments.
Well, thank you so much for attending the earnings call of EHL. Thank you for coming today and for your interest in the company. Bye.
Thank you. On behalf of Eldeco Housing and Industries Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.